Welcome to Facts Not Forecast, your daily edge in the stock market facts, insights, and opportunities you won't hear anywhere else. Today, we're plunging into the fascinating world of SoundHound AI, ticker symbol SOU. This company is, well, in many ways, it's a microcosm of the whole AI investment scene right now. You've got explosive growth, really cool tech, bold claims, but it's all balanced against, pretty significant valuation risks and, frankly, a tough path to actually making a profit. So our mission today is simple. Cut through the noise, unpack their latest Q2 2025 earnings, get a handle on their AI business model, look at the growth drivers, those partnerships they keep announcing, and then crucially, the potential risks and what analysts are saying, all the key stuff.
Exactly. And in this AI space, which is moving so fast, just knowing what a company reports, well, that's not really enough, is it? To form, properly informed opinion, you absolutely have to understand the why. Why the performance looks like it does, the strategy behind it, the tech. We'll try and connect those dots for you today.
Okay, let's dive straight into SoundHound AI's Q2 earnings then. And wow, the headlines really jumped out at me. That reported revenue, $42.7 million, it significantly beat the forecast, right? Came in way above the $32.88 million expectation.
Yeah, a huge beat on revenue. And that represents, get this, a 217% increase year over year. Massive growth there.
Incredible jump. And on the earnings per share front?
Also, better than expected. They reported a loss per share of -3 cents, which was better than the forecast loss of -9 cents. So yeah, on the surface, a strong beat.
Okay, strong beat top line, better EPS than feared, but then there's the net income figure.
Yes.
Ugh.
Let's not overlook that. While revenues soared, their GAAP net income for the quarter was actually a loss of $74.72 million.
Oof. That's a big swing from the previous quarter, which was positive, wasn't it?
At a very notable shift. It was positive $129.93 million last quarter. Now, the company does point out there was another $31 million non-operating, non-cash thing. Something about a change in fair value of contingent liabilities impacting that GAAP net loss.
Yeah.
Accounting stuff, basically.
Right, accounting stuff. But even factoring that out, it's still a significant loss. What does that tell us about their strategy right now?
Well, it really suggests SoundHound is deep in an aggressive growth phase. They're investing heavily, really pouring money in to grab market share. That kind of operational burn, it's needed to fuel this expansion. They're clearly prioritizing scale and future revenue over immediate GAAP profitability.
Which is pretty common for high-growth tech, but definitely a key trade-off for investors to understand.
Absolutely. They're spending to grow, and you see that loud and clear on the bottom line.
Okay, before we get deeper into the numbers, maybe a quick refresher for anyone newer to the name. What exactly does SoundHound do?
Right. So at its core, SoundHound AI develops and commercializes really advanced voice, sound, and natural language AI tech. They offer this independent conversational AI platform. The whole idea is to let businesses across all sorts of industries deliver more natural, intuitive ways for people to interact using voice. They've actually been around a while, founded back in 2005, based out in Santa Clara, California.
Yeah.
And yeah, listed on NASDAQ, symbol SOUN. Think of them as building the brains behind talking tech.
Got it. And they structure this around their 3 pillars strategy, which seems to be driving this growth we're seeing.
That's their framework, yeah.
Pillar 1 is products like voice assistants in cars, that kind of thing. Pillar 2 is services, think sophisticated AI for customer service in big companies.
Right, for enterprises.
And Pillar 3, which honestly sounds like the really ambitious one, is voice commerce, trying to link everything up for seamless transactions using just your voice.
Yeah, that's the big vision. And underpinning all this, the tech backbone, is where they claim a real edge. They talk a lot about Polaris. That's their own proprietary foundation model. It handles multiple modes, multiple languages. And the CEO, he's not shy about it, claims Polaris easily beats peers, even big tech, by over 35% in accuracy.
35%? That's huge.
It is. And apparently runs 4 times faster on latency, so almost instant responses, and does it at a lower cost.
Okay, that's a really bold claim, beating big tech on accuracy, speed, and cost, if that actually holds up in the real world.
It's a massive differentiator, right?
Yeah.
In a market packed with giants, having better performance like that, well, it's a powerful way to win clients. Plus, they recently added Vision AI, so now it's not just about hearing. The AI can also see and understand visually in real time.
Okay, so it can understand context better, like if I'm pointing at something while talking to it.
Exactly, that kind of thing. It just compounds the potential use cases and makes the whole user experience way richer.
Okay, this is where it gets really interesting for me how their M&A strategy seems to be working out. The CEO talked about a repeatable turnaround story.
He did. He pointed specifically to acquisitions like Sync3 and Amelia. Apparently, these were declining before SoundHound bought them. But post-merger, within just 12 to 18 months, they flipped that to growth
How'd they manage that?
by integrating the tech, the product stacks, basically making everything work together better and faster, delivering more value to the customer quicker. And there's a key metric that shows this: net revenue retention, or NRR.
Right, how much existing customers are spending year over year?
Exactly. Pre-acquisition, it was below 90%.
Yeah.
In Q2, it jumped to over 120%.
Wow. Over 100% means customers aren't just staying, they're spending more. That's a really strong sign.
It absolutely is. Shows the product sticky and customers see the value.
So where are we seeing this play out in the market? Which sectors are they gaining traction in?
Well, you see it reflected clearly in their market footprint. In automotive, for instance, they rolled out their generative AI solution, Chat AI, with 3 more global brands just in North America. And crucially, they signed what they called a large deal in China, millions of units going into a major Chinese auto brand.
China's a huge market. Landing a big deal there is significant.
It really is. It shows global reach and trust from major manufacturers. Huge scale potential there.
Okay, what about outside of cars?
Restaurants are another big one. They expanded with some household name fast casual brands that are cross-selling their Amelia platform there too. New wins include places like IHOP, Red Lobster, Peter Piper Pizza. They renewed Mod Pizza, expanded with Chipotle, Firehouse Subs, Habit Burger. The list goes on. They now have over 14,000 locations using their voice AI for ordering. Added about 1,000 just in Q2.
14,000 locations. That's real, tangible adoption happening fast.
It is. And it's not just consumer-facing stuff. Enterprise AI is also making strong headway. They now count 7 of the top 10 global financial institutions as customers. Getting into big finance like that, well, it signals serious trust in their tech security and reliability.
Definitely a big hurdle to clear in finance.
Huge. They're also moving into healthcare, primary health solutions, Molina Health, even one of the world's biggest healthcare companies, and retail too. And finally, don't forget their channel partnerships. Working with firms like EXL, PAR Technologies, Acrelec, Avant Communications, that basically multiplies their sales force, helping them reach more industries faster.
Right, leveraging partners to scale quicker. It really sounds like they're building out this whole ecosystem. Let's circle back to voice commerce for a second. That flywheel effect they talk about, this isn't just about ordering a pizza anymore, is it?
No, not at all. It's moving beyond just a, future vision. It's starting to gain actual traction. They're piloting it now in vehicle transactions. Think ordering food, finding and paying for parking, making reservations, all while you're driving, just by talking. They're doing this with new OEM customers, the car makers, and they expect to launch partnerships with platform giants later this year. That could bring voice ordering to millions.
Platform giants? Like who? Big tech marketplaces?
They didn't name names, but yeah, you can imagine the potential scale. And you're right about the flywheel. This isn't just about the direct revenue from those transactions. It drives adoption in their other pillars, the products, the services. It gets people used to using their voice AI. It becomes self-reinforcing. It's about owning that conversational interface to commerce.
Okay, but when we talk voice commerce, how unique is SoundHound here? I mean, aren't Google, Amazon, Apple all pushing hard on voice transactions, especially in cars? Seems crowded.
That's a really critical point. It is a crowded space. Lots of players want a piece of voice AI. SoundHound's angle, their differentiator, seems to be leaning heavily on that proprietary Polaris model, the accuracy, the speed, and also on their specialized agentic AI platform, Amelia. They're betting on the quality and the autonomy of their conversational agents being superior.
Okay, agentic AI. What does that actually mean in practice? Is it just a fancy name for a chatbot?
Good question. No, it's meant to be more than that. It implies true agent capabilities, meaning the AI can understand, reason, and then act autonomously to actually complete complex tasks for you, not just answer questions. They're already migrating 15 large enterprise customers onto their latest version, Amelia 7. It uses this framework they call Agentic Plus, blending autonomous actions with deterministic functions, basically, rules it has to follow for safety or compliance. Think of it taking a complex order autonomously, but having built-in guardrails for sensitive stuff. Plus, it has low-code, no-code tools, making it easier to deploy, and it integrates Polaris for that speed and accuracy. It's about building genuinely capable AI assistants.
Okay, so lots of promising growth, advanced tech, but the market's often the final judge, right?
Let's switch gears to the stock itself. SOUN. What's the picture there?
As of August 22nd, 2025, the stock closed at $12.56. But that 52-week range, wow, $4.13 all the way up to nearly $25, $24.98.
Right. Yeah, volatile is definitely the word for this stock. And the performance reflects that. It's kind of a mixed bag, isn't it? Over the last year, it's up significantly, somewhere between 144% and 150%. Fantastic if you got in early.
Huge returns.
But year to date, it's down about 37%. And just in the last week, it dropped nearly 20%. So, yeah, a strong long-term run, but facing some real headwinds recently.
So what are the analysts saying? And what about the technical chart signals?
Well, the analyst consensus is generally pretty positive. Most have it as a buy or overweight. There are about 8 or 9 analysts covering it. Their average 12-month price target is hovering around $14.22 to $14.50, so suggesting maybe 15% upside from where it is now.
Okay, decent upside potential according to analysts. Technicals.
Technicals are mixed, more confusing maybe. Some short-term indicators are actually flashing strong buy, but the moving averages, which give you a sense of the medium-term trend, generally paint a sell picture right now.
Can you break that down a bit? What are those indicators telling us?
Sure. So, for example, the 14-day RSI, the Relative Strength Index, it's at 43.475. That's kind of in no man's land, maybe leaning towards weak momentum, often seen as a sell signal in the short term. It's not deeply oversold yet. Then you have the MACD indicator, which is negative, more 0.421, also pointing towards weakening price action recently, another short-term bearish sign. But interestingly, the 200-day moving average, which is a much longer-term trend line, suggests support right around $12.50, basically where the stock is now. So maybe you're finding its footing long-term.
Short-term caution, but potential long-term support.
Okay.
Now, despite the growth and that goal for adjusted profitability by year-end, those gap losses are still pretty substantial.
They are.
How realistic is that profitability target, really? And what's the biggest hurdle?
That really is the million-dollar question for so many of these high-growth companies, isn't it? Look, they did raise their 2025 revenue guidance now $160 to $178 million. And yes, they aim for adjusted profitability by the end of 2025. But remember, adjusted often excludes things like stock-based compensation, so actual GAAP profitability, the standard accounting profit, that might still be a ways off.
Right. Adjusted versus GAAP is a key distinction.
Definitely. And it's a stark contrast to their current numbers. Trailing 12 months net profit margin is negative 414%. TTM EPS is minus 63 cents, the biggest hurdle. It's simply scaling revenue fast enough to outrun those huge operating expenses without constantly needing more cash, either through dilution or debt. On the plus side, their balance sheet does look strong. They reported $230 million in cash and equivalents at the end of Q2, and they claim no debt. The debt-to-equity ratio is tiny, 0.01.
Okay, so that $230 million in cash gives them a good runway, a buffer to execute the plan.
Exactly, a significant runway.
But the path to true GAAP profit still looks steep, which naturally brings us to risks. What are the potential headwinds or concerns that investors really need to keep front of mind with SoundHound?
Well, first and foremost, you have to talk about valuation. The metrics are just really high. A price-to-sales ratio, PS, of nearly 39. That means you're paying almost $39 for every $1 of annual sales the company makes.
That sounds very rich.
It is. And even looking at EV sales, enterprise value to sales, which includes debt, though it's still over 37, compare that to, say, RingCentral, another tech player with a PS around 5.8. It just shows the incredibly high expectations baked into SoundHound's price. High expectations mean high risk if they stumble. Reminds me a bit of the dot-com era enthusiasm.
Yeah, that PS is eye-watering. What else?
Then there's the sheer volatility. We saw that 52-week range. The beta, a measure of volatility versus the market, is between 2.76 and 3.23. That means the stock moves roughly 3 times as much as the overall market, both up and down. It makes for a very bumpy ride. Even the CEO acknowledged it, mentioning the lumpy nature of these deals can cause quarter-to-quarter volatility.
So not for the faint of heart.
Definitely not. We also need to mention the insider selling. There's been a noticeable pattern. Key execs, CEO, CFO, COO, CTO, VPs, and directors have been selling shares, millions of dollars worth, between roughly December 2024 and July 2025. Now, there can be many reasons for insiders to sell, personal financial planning and so on, but it's generally something investors watch closely. Seeing execs reduce their stake isn't usually seen as a strong positive signal.
Right. It always raises an eyebrow, doesn't it? Even with potential benign explanations.
The CEO says they compete against legacy providers or the big tech providers and win on tech quality. But let's be real. The AI space is incredibly crowded, competing head-to-head and sustaining an edge against giants like Microsoft, Google, Amazon, who have almost unlimited resources, That's a monumental task
A David versus Goliath situation in some ways.
in many ways. And finally, circling back to it, the profitability journey. Even aiming for adjusted profit by year end, those substantial gap net losses and negative operating margins, negative 120% ETM, showed it's still a significant ongoing challenge to reach sustainable profitability.
Okay, so summing it up, it feels like a classic high-growth tech story, right? SoundHound AI's got impressive revenue growth, some really strategic wins in hot AI markets underpinned by genuinely advanced tech, and it seems a smart acquisition playbook. But like so many others chasing hypergrowth in AI, it comes bundled with significant risks. That sky-high valuation, the stock's wild volatility, the ongoing profitability challenge, and tough competition. It's a real balancing act for investors. So what does this all mean? Could SoundHound be the hidden gem in AI, or will it struggle against the giants? Appreciate you tuning in. Until next time, stay sharp, stay patient, and let the market work for you.